Ever wished you could just like get a crash course on a major company without having to read through tons and tons of reports?
Yeah.
Well, today we're diving into the world of Dr. Reddy's Laboratories,
Okay.
a uh, a major player in the Indian pharmaceutical industry.
Interesting.
We've got some insightful data from Screener to help guide us.
Okay.
So think of this as like your express ticket to understanding Dr. Reddy's.
Gotcha.
We're going to be breaking down their business, their performance, recent events,
Mhm.
kind of the whole 9 yards.
Nice.
Now, here's something interesting. Did you know that a huge chunk of their business comes from their global generics segment?
Really?
And their nervous system drugs are some of their top earners.
Interesting.
So where do we even begin with a company as big as this?
Well, I think a good place to start is always with the foundation.
Okay.
Dr. Reddy's Laboratories is headquartered in Hyderabad, Telangana, India,
Mm-hmm.
founded back in 1984,
Cool.
publicly traded on both the Bombay Stock Exchange and the National Stock Exchange of India.
So they've been around the block a few times.
Yeah.
And their portfolio isn't just limited to generics, right?
No, not at all. They're also involved in active pharmaceutical ingredients, which are basically the raw materials for drugs.
Okay.
They've also got custom pharmaceutical services where they partner with other companies for like specific needs. And they're also involved in biosimilars, which are kind of like generic versions of those really complex and pricey biologic drugs.
Yeah.
Oh, and let's not forget about their differentiated formulations.
Oh, okay.
Basically taking existing medications and tweaking them for like better delivery or effectiveness.
So they really do have their fingers in a lot of pies.
Yeah.
But you're right. That global generic segment is really their bread and butter.
It is. In fiscal year 2022, it brought in 83% of their revenue.
Wow. Now that's what I call a cornerstone.
Mm-hmm.
You mentioned earlier that they offer over 400 generic drugs.
Yeah.
What's their secret? How do they do this so successfully?
Well, they have a multifaceted strategy that seems to be working for them. They've developed expertise in active ingredients, product development, navigating all the regulatory stuff, intellectual property rights, and then making their supply chain more efficient. All of that allows them to deliver high-quality, affordable generics that people are looking for.
Sounds like a well-oiled machine.
Yeah.
But within that massive generic segment, are there any specific areas they're really focused on?
Definitely. Within that global generic segment, there are a few therapeutic areas that really stand out.
Okay.
Nervous system drugs, which are medications for things like anxiety and depression and pain management, are their top performer, bringing in 14% of the segment's revenue.
So they're tapping into a market with a lot of demand. What else?
And then you've got gastrointestinal medications, things for like heartburn and ulcers, coming in at 13%. And then anti-infective drugs, you know, the ones that fight off infections, bacteria, fungus, those make up 10%.
So it sounds like they have a solid understanding of what's going on in the market and are catering to some pretty widespread health concerns.
Yeah.
But it also sounds like they're not content to just stay where they are.
Right.
In fiscal year 2022, they filed 7 new abbreviated new drug applications with the U.S. FDA.
Yeah.
Essentially, applications to sell generic versions of brand name drugs in the U.S. So they're really trying to expand their products in the U.S., which is a huge market, right?
Huge market.
Speaking of growth, let's talk about their financial performance.
Sure.
I'm sure our listener is very interested in how Dr. Reddy's is doing financially.
Well, their profit growth over the past 5 years has been really impressive. It's reached a compound annual growth rate, CAGR, of 24.4%.
Now, I know you're the expert here. Can you break that down for us? What does that mean, and why should our listeners care?
So CAGR is a way to measure, on average, how much an investment has grown each year over a specific period. And 24.4% is a really healthy number. It shows that they're consistently making a profit, which is good news for investors. It suggests that, you know, they're not just a flash in the pan.
Right.
They have a solid track record of providing value.
So it's not just about making money, it's about sustainable growth.
Exactly.
Demonstrates their ability to manage that complex pharmaceutical market
Yeah.
and consistently deliver.
So now let's look at their shareholding patterns.
Okay.
This can give us some insight into who's really running things.
As of September 2024, promoter holding, which refers to the company's founders and their families, is at 26.64%.
Mm-hmm.
Public holding is at 73.36%.
Okay.
Within that, you've got foreign institutional investors and foreign portfolio investors holding 27.53% and domestic institutional investors holding 25.89%.
Mm-hmm.
What can you tell us about this mix?
What's interesting, it suggests a good balance between the influence of the founders and the involvement of outside investors, both domestically and foreign.
So it's not like one group has total control,
Right.
which I imagine is a good thing in terms of transparency and corporate governance.
Yeah, you're thinking along the right lines.
Okay.
This kind of distribution of ownership usually means greater accountability, and it helps to lower the risks that are associated with concentrated ownership.
Hmm.
But it's also important to remember that the high public and FIFPI holdings can make the company's stock price more sensitive to changes in the market.
Kind of a double-edged sword.
It is.
So we've covered the company's background, their dominance in generics, their financial performance, and the shareholding patterns. But I have a feeling there's more to the story. What else should our listener know about Dr. Reddy's?
Well, there's always the news and recent announcements. These can give us clues about the company's direction, potential challenges, and opportunities.
Ooh, insider information.
Yeah, kinda.
Sounds intriguing. Let's dive into that next time. Okay, so let's dig into some of that recent news from Dr. Reddy's. I'm always interested to see what's making headlines for a company,
Hmm.
It gives you a peek into their day-to-day and the issues they run into. What did you find?
Well, it seems that Dr. Reddy's has hit a few regulatory snags lately.
Oh.
Their subsidiary in Ukraine got hit with a fine, 280 euros by the Ukrainian tax service.
280 euros. That doesn't sound like much for a company their size. What was the problem?
Unfortunately, they didn't really give any details in the announcement,
Okay.
but it does show how complicated it is to operate globally. Every country's got its own regulations and tax laws. Keeping up with all of them can be a real pain.
It's a good reminder that even huge companies like Dr. Reddy's had to be super careful about regulatory compliance.
Mhm.
What other news did you find?
There was also news about a penalty on one of their subsidiaries in Kazakhstan.
Okay.
This one was for 17.6 million Kazakhstan tenge, which is about 40,000 US dollars.
Okay.
The reason they gave was tax disallowance.
Tax disallowance. That's a little vague. What does that even mean?
It basically means that Kazakhstan's tax authorities didn't agree with some of the expenses that the subsidiary tried to deduct from their taxes.
Huh?
This happens sometimes. Could be because they interpret the tax rules differently,
Right.
but investors should definitely keep an eye on this kind of thing. If a company keeps getting hit with fines, it might be a sign of problems with their finances or their internal controls.
Yeah, it's like getting a speeding ticket.
Mm.
One might be an accident, but if you keep getting them, maybe there's a problem.
Right. It's all about doing your homework and watching out for red flags that might affect the company's financial health or reputation.
So a couple of regulatory bumps in the road.
Well,
Hopefully there's some positive news too. What else is going on with Dr. Reddy's?
there is some good news.
Okay, good.
They just announced the dates for some upcoming meetings with analysts and investors.
So they're actively engaging with the financial community. That's generally a good sign. Right?
Definitely. These meetings give the company's management a chance to talk about the business, answer questions from analysts, and maybe even attract new investors.
A chance for them to show off their successes, address any concerns, and really pitch to the people who control the money.
Exactly. Transparency and open communication are really important for building trust with investors.
Okay, so they're being proactive. Anything else interesting in the news?
One last thing you might find interesting, there was an announcement about them giving out shares through employee stock options.
Ooh, stock options. Always
Oh.
interesting. What's the big deal with this announcement?
Companies often use stock options to attract and keep talented employees.
Okay.
By giving employees the option to buy company shares at a set price, it connects their success to the success of the shareholders.
It's a win-win, right?
Yeah.
Employees want to help the company do well because that increases the value of their stock options, and the company gets a more engaged workforce.
Exactly. And it's a way for the company to compensate employees without having to pay them cash right away.
It's a smart way to balance their finances with rewarding their employees.
Right.
So we've looked at some regulatory challenges, their engagement with the financial community, and their employee compensation strategy.
Yeah.
I feel like this deep dive is giving us a really complete view of Dr. Reddy's Laboratories.
It is. And it shows how important it is to not just rely on one source of information. You got to look at things from different angles to get the full picture.
Speaking of sources, we've been using Screener a lot for this. Can you tell our listeners a bit more about Screener and what they should keep in mind when they use it?
Screener's an awesome resource for investors.
Okay.
It pulls together a ton of financial data on public companies, which makes it super easy to compare key numbers, see how they're doing over time, and get a quick idea of the company's financial health. But it's really important to remember that Screener is just one tool.
So don't make any big decisions based only on what you see on Screener.
Exactly. While the data on Screener is usually accurate, you really should do your own research before making any investments. Read company reports, look at independent analyst reports, think about the overall economy and industry trends. It's about getting a well-rounded understanding.
It's like getting a second opinion from a doctor.
Yeah.
You wouldn't make a major decision about your health based on just one visit.
Exactly. Investing is the same way. You need to think carefully. Screener can be helpful, but it's a starting point, not the end.
Okay, so we've talked about the company's background, their focus, their financials, and the latest news. I feel like we're really starting to get a sense of what Dr. Reddy's is all about.
We've covered a lot, and I think our listeners are well on their way to understanding this important company.
But before we finish up, I want to hear your main takeaways. What surprised you or stood out to you about Dr. Reddy's?
Honestly, I was really impressed with their commitment to the global generics market. They've managed to become really big while still keeping their focus on quality and affordability. That's a powerful combination that sets them up for success.
I agree. Their financial performance shows how well their strategy is working. That 24.4% CAGR over 5 years is really something. But besides the numbers, I was really interested in their commitment to employee stock options.
Yeah, it's a smart move that says a lot about their company culture.
Right.
Not only does it help them attract and keep good employees, but it also shows they want their employees to have the same goals as their shareholders.
It creates this feeling of shared goals and ownership, which can be really powerful.
Yeah.
So we've covered a lot of ground, but I still have one big question. With their strong generics focus and all this recent regulatory activity, how do you think Dr. Reddy's Labs is positioned for future growth in the global pharmaceutical market? I mean, it seems like you're walking a tightrope between opportunity and risk.
Yeah, that's the question, isn't it? The one that everyone wants to know. And yeah, there are definitely challenges coming up. The regulations are always changing, like we saw with those fines in Ukraine and Kazakhstan, and just staying compliant can be a real pain.
It's like they're playing a game where the rules keep changing.
Right.
They have to deal with those regulatory hurdles and also keep their prices competitive, especially in the generics market. How do they manage all of that?
It's a tough balance for sure. But Dr. Reddy's has a lot going for them. Their
Yeah.
expertise in generics, their global presence, and their focus on innovation, all of that gives them a strong base for growth.
Plus, we can't forget about the growing demand for affordable healthcare worldwide.
Right.
I read somewhere that the global generics market is expected to reach like $700 billion by 2027.
Wow. That's huge.
That's a massive number, and it shows something really important. As people get older and healthcare costs keep going up, the need for generic medications is just going to keep growing.
Yeah.
This puts companies like Dr. Reddy's, who are focused on affordability, in a really good spot.
Like they saw this coming and got themselves ready. Kinda, yeah. But it's not all easy. The generics market is super competitive with new companies popping up all the time.
Right.
Dr. Reddy's can't just sit back and relax. They need to stay sharp and innovative to keep their advantage.
It's a race to stay ahead.
Exactly. But they've got a history of success. They're focused on the right areas, and they're always looking to improve. I think they're ready to face the challenges and take advantage of the opportunities that are out there.
So there you have it. We've taken a deep dive into Dr. Reddy's Laboratories, and I feel like I could pass a test on them right now.
Haha. I think you're definitely well equipped now with insights about this big player in the pharmaceutical industry.
We've talked about their business model, their finances, recent events, their shareholding structure, even how they compensate their employees.
We've looked at their strengths, their weaknesses, and their potential.
So what does all this mean for you, our listener? Well, we hope it's made you a little more interested in Dr. Reddy's and the whole world of pharmaceuticals.
Maybe you'll even do some more research on your own. Look at their investor presentations or even talk to your friends about the future of generic drugs.
The point is, you've got the knowledge now to join those conversations and form your own opinions.
And remember, knowledge is power, especially when it comes to business and investing.
So use what you've learned today as a starting point for your own exploration. Who knows, you might find your next big investment opportunity or just learn more about a really interesting industry. Until next time, happy learning.